Ever wondered why some have so much while others struggle to get by? The answer lies in a concept as old as society itself: economic inequality. In today's world, economic inequality stands as a stark reminder of disparities in wealth distribution. From towering skyscrapers to humble shanties, the gap between the wealthy and impoverished spans vast landscapes, shaping societies and influencing destinies. Understanding this wealth gap is not just about numbers, but about unraveling the complex web of factors that perpetuate inequality. Join us as in this video we dig deeper into this critical issue to gain a clearer perspective on its implications and potential paths towards a more equitable future. When people's earnings and wealth are unequal, we say that there is economic inequality. Those differences may be really substantial. As of 2024, there were 2,781 billionaires in the world, according to Forbes. On the other hand, more than 700 million people around the world are living on less than $2.15 a day, according to the World Bank. This is an improvement compared to 1990, when there were 269 billionaires and more than 1.9 billion people lived in extreme poverty. These figures will be seen by some as proof that as the tide goes up, everyone benefits. In general, people's level of living has improved throughout the last 30 years, and the world's wealth has grown. Of course, it's possible for both views to be correct at the same time. Some may find it challenging to believe that anybody can be poor when the total wealth of the world's billionaires is $14.2 trillion. These kinds of disparities, along with those that many people witness on a daily basis, such as individuals living in tent camps just kilometers away from expensive condominiums, raise questions about economic disparity. Please tell me, why and how does it take place? This is normal, or is someone gaming the system? Could we try to level the playing field by doing what Sweden has done and raising taxes on the wealthy? Will this disparity worsen as a result of the pandemic? Income inequality, or the gap between the richest and the poorest members of a community, is fundamental to any discussion of economic equality. What resources do individuals have at their disposal that can help them weather storms and put money toward opportunities when they arise? These distinctions are significant for several reasons. The mental toll of economic inequality has to be considered first. We all experience it at some point in our lives. The amount of money we have, the things we can afford, and the level of comfort our wealth provides are not the only factors that determine our level of income or net worth satisfaction. On the contrary, we are only somewhat satisfied when we consider how our financial situation stacks up against that of our friends, family, co-workers, classmates, and even our employers. As an example, let's use Lorenzo, an accountant. Lorenzo could be content with his $70,000 annual salary as an accountant until he finds out that his colleague Sebastian makes $80,000. I believe that the disparity is unjust. It annoys him, and he may even become irate about it. Sebastian is confronted by Lorenzo, who asks him how he manages to make an additional $10,000 a year. He notes that they have the same credentials, started working for the company at the same time, and do the same job. That their CEO makes $60 million is more significant, Sebastian counters. Additionally, their buddy Marco, who is employed by a contractor their company uses for customer support, earns $20 per hour and does not get the same perks as them. Lack of health coverage. Not participating in a 401(k). There are only 10 days of paid vacation each year, and he can't use them all for vacation, personal time, or sick leave. The continuous wealth and income difference between whites and non-whites, as well as between males and women, is a major factor fueling economic inequality. Despite some improvement in the last few years, huge disparities between white and black families persist today as a result of systemic racism that began with enslavement and persisted through the Jim Crow period. The Jim Crow laws were state and local laws introduced in the southern United States in the late 19th and early 20th centuries that enforced racial segregation. Jim Crow being a pejorative term for an African American. Such laws remained in force until 1965. Inequality has worsened in many emerging nations. However, the overall trend is less clear when looking outside these specific categories of countries. Latin America, the Middle East, North Africa, and Sub-Saharan Africa have some of the world's greatest income disparity rates, which have remained largely consistent on average. Generally speaking, wealth disparity is far greater than income inequality within nations. Its upward trajectory across nations began about 1980, mirroring that of income disparity. Capital income and inheritance both contribute to a more unequal distribution of future income as wealth disparity rises. With the income share of the top 10% and much more so the top 1% increasing dramatically in many nations, inequality has been most pronounced at the top of the income distribution. This was especially true prior to the 2008-2009 worldwide financial crisis. A smaller portion of the income has gone to the lowest half of the income distribution, while those in the medium and lower income brackets have also seen a decline. The middle class has been shrinking, and intergenerational mobility has been decreasing as a result of these trends in inequality, particularly in developed countries where income inequality and polarization have been on the rise. Although inequality inside nations has been on the rise, inequality across countries, which measures disparities in per capita income, has been on the decline in recent decades. The income gap between developed nations and faster-growing developing economies, particularly big ones like India and China, has been shrinking. There has been a slight decrease in global inequality since approximately the year 2000. The decrease in international inequality more than offset the rise in domestic inequality. A growing portion of global inequality is attributable to growing disparities within countries. This proportion will reach 2/3 in 2020, up from less than half in 1980. The future of inequality on a global scale will be considerably more affected by changes in inequality inside individual countries. COVID-19 has exacerbated income disparities. The World Bank reports that global inequality has returned to levels not seen in a decade as a result of the slow recovery of emerging market and developing economies from the pandemic slump, which occurred even before the conflict broke out. The fight against poverty has stalled due to the spread of COVID-19. According to the bank's Global Economic Prospects report, around 2/3 of the world's extreme poor reside in emerging areas, where economic disparity within nations is especially acute. To what extent is the World Economic Forum actively promoting equality, diversity, and inclusion? The conflict has exacerbated an already challenging position. Global growth for 2022 has been downgraded by economists at the UN Conference on Trade and Development. Developing nations already have $1 trillion in debt, and inflation is on the rise. So the United Nations Agency is predicting that a massive economic rescue operation similar to the Marshall Plan after World War II may be necessary to save low and middle-income nations from financial collapse. The World Inequality Lab argues that in order to solve this problem, world leaders must acknowledge that the existing wealth gap is not inevitable. The correct policies may make a difference, as shown by the experiences of several European nations and China, which have relatively low levels of economic disparity compared to places like the US and India. The World Bank has said that increasing global immunization efforts should be the first and most important step in order to stimulate economies. In 2021, low-income nations were hit the hardest by the lack of dosages. According to Oxfam, the COVID-19 mortality rate is almost double in low and middle-income nations compared to wealthy nations. According to the nonprofit, this vaccine apartheid is aggravating global inequities. There has to be an effort to increase funding for developing country governments so they can combat economic disparity. Assisting marginalized groups and increasing accessibility to essential services like healthcare and education will be top priorities. Over the previous 4 decades, the private sector has amassed a greater and larger percentage of global wealth, leaving governments poorer. This tendency was exacerbated by the government's substantial borrowing during the epidemic, according to the World Inequality Lab. The World Bank has called for swift measures to increase the flow of aid and speed up debt reduction initiatives for developing nations. The International Development Agency was recently restocked with $93 billion to aid low-income nations in their response to the epidemic and economic recovery. This is a wonderful development.